Good evening and welcome to Market Pulse for Thursday, July 23rd. This was the worst day for stocks in a month. The S&P 500 fell 1.21% to close at 7,408.30. The Dow dropped 506 points, or nearly 1%, to 51,711. And the Nasdaq Composite led the decline, falling 2.15% to 25,137. Two forces did the damage: crude oil breaking above $100 a barrel, and a brutal reaction to the earnings from Alphabet and Tesla. To the movers, Tesla was the worst of them, falling 14%. The company beat on revenue, but earnings per share came in roughly 39% below expectations, and operating income dropped 57%. Alphabet fell 7%, even after reporting the largest quarterly profit in its history, because it raised its 2026 capital spending plan to between $195 and $205 billion. Here is the detail that connects them. Both companies reported negative free cash flow for the quarter. The other hyperscalers followed them down. Meta, Microsoft, and Amazon all closed lower. Let me put some numbers behind the capital spending story, because it is the theme of this earnings season. Alphabet's capital expenditure in the June quarter alone doubled from a year ago to nearly $45 billion. Its full-year plan moved up from $180 to $190 billion to $195 to $205 billion. Analysts had modeled about $188 billion. So the company spent more than the street expected and told the street to expect even more. Google's finance chief said they remain, in her words, supply constrained, and that spending will rise again in 2027. The oil story is a geopolitical story. Iran-backed Houthi militants claimed attacks on 2 Saudi oil tankers in the Red Sea, saying the strikes were meant to enforce a newly declared blockade of Saudi ports. President Trump responded by warning that the United States would strike an Iranian bridge or power plant every time Tehran attacks a vessel in the Strait of Hormuz, and said he was considering a massive attack. Iran said it would retaliate against American-linked energy infrastructure across the region. And separately, Kazakhstan suspended crude exports through the Caspian pipeline terminal after drone attacks. Supply risk is now priced everywhere. And then, after the bell, Intel. The company reported revenue of $16.1 billion, up 25% from a year ago. That is Intel's fastest quarterly growth since 2011. Adjusted earnings came in around 42 cents a share against expectations near 22 cents, roughly double. Data center revenue was $6.3 billion, well ahead of the $5.5 billion analysts modeled. And guidance for the current quarter, $15.8 to $16.8 billion, came in far above the roughly $15 billion the street expected. The stock rose about 12% in late trading. Turning to Wall Street research, where two firms made split calls inside their own sectors. KeyBank raised Ameren and Duke Energy to overweight, with targets of $122 and $139, while cutting Southern Company to underweight. Deutsche Bank did something similar in the banks, upgrading JP Morgan to buy with the target going to $375, while downgrading PNC Financial to hold. Elsewhere, Wolfe Research lifted AT&T to outperform, Jefferies raised Barris to buy, and Loop Capital cut its Pegasystems target to $25 from $55. So, what should you be watching? First, oil above $100 changes the interest rate math. Traders are now assigning roughly a 61% probability to a Federal Reserve rate hike in September. Not a cut, a hike. Treasury yields rose across the curve today, with the 10-year near 4.67%. Second, and this is new, 2 of the largest companies in the world just reported negative free cash flow in the same quarter. For years, the case for mega-cap technology was that these businesses generate enormous cash. That is the assumption the market is now re-examining. By sector, the damage was concentrated. Communication services and consumer discretionary took the brunt of it, which is simply another way of saying Alphabet and Tesla. Interestingly, chip stocks did not follow. Memory names traded higher against the broader trend, and the Philadelphia Semiconductor Index finished roughly flat, because Alphabet's spending plan is, for chip suppliers, a revenue forecast. The same number that punished Alphabet supports the companies selling it hardware. And energy remains the best performing sector of 2026. Across other assets, Brent crude rose more than 6% to trade above $100, a 5th consecutive higher session and its highest level since May. West Texas Intermediate moved back above $90, up nearly 5%. Gold, interestingly, eased below $4,100 an ounce off a 2-week high as money moved toward energy. And in Europe, the European Central Bank held all three of its key rates unanimously, leaving the deposit rate at 2.25%. President Lagarde declined to pre-commit, saying forward guidance is not currently in the cards. Looking ahead, Friday brings American Express, Verizon, NextEra Energy, and HCA, along with June new home sales. Then the main event, the Federal Reserve announces on Wednesday, July 29th, and futures markets are pricing a high probability that rates stay unchanged. The Bank of England follows on Thursday, and the rest of big technology, Microsoft, Meta, Amazon, and Apple, still has to report. After what happened to Alphabet and Tesla this week, every one of those companies now knows exactly which number the market is going to look at first. And that's the Pulse for Thursday, July 23rd. Thanks for watching. If this was useful, subscribe and turn on notifications so you get the close every day. As always, this is for education only and is not investment advice. I'll see you tomorrow.